to lose money every single year. So why would you save something that loses money every year? And what this means for somebody on retirement plans is that after you retire, the value of your dollar goes down and your cost of living keeps going up. To my rich dad, that was bad advice and made no sense.
We sold it from 160 to 200 or something like that.
A nice tidy profit.
Yeah, we made about $3.5 billion on a $500 million investment, as it turned out. I still sold it way too soon. Since I sold it, they must have shot a gun off and said, Warren's sold, now it's time to let it go up.
Well, yeah, you left money on the table.
A lot of money.
Dummy.
That's
what
exactly right.
Charlie Munger would say. Right?
Charlie would say, you've done it again.
But you can't keep always trying. For the average person who's maybe never bought a stock before, what's your advice about that? You can't constantly sit there and wait and say, oh, it's going to go higher, it's going to go higher.
We don't even think about that. What we think about is how much is it selling for, how much do we think it's worth. When we bought it at $35 billion effectively, I felt the company was probably worth at least $100 billion.
How did it come to your attention? How do you find a stock like PetroChina?
I sit there in my office and I read an annual report, which fortunately was in English, and it described a very good company. And told about the oil reserves, told about the refining, told about the chemicals, everything else. And I sat there and read it, and I thought to myself, this company is worth about $100 billion. Now, I didn't look at the price first. I look at the business first and try and figure out what it's worth, because if I look at the price first, I'll get influenced by that. So I look at the company first. I try to value it, and then I look at the price, and if the price is way less than what I've just valued it at, I'm going to buy it.
And how do you value it?
Well, that's the trick. Yeah. But it's essentially what I would pay for the whole business if I could buy it. And when we sold the stock, it was valued, we'll say, at probably 250 to 275 billion. And we thought that was a fair price. Now, oil had gone up from $30 a barrel to $75 a barrel. Now it's up even further. But today, yesterday anyway, I believe PetroChina is the second most highly valued company in the world. Higher than GE, next to Exxon.
ExxonMobil.
Next to Exxon.
Have you sold the entire stake?
Yeah, I have. Mm-hmm. I wish I hadn't, but I have.
As of when?
Well, we sold it over a period of time.
Sold it over a period of time.
If it went down a lot, we'd buy it back.
Would you ever buy or sell a stock based on political pressure or
no.
sort of?
So no, the answer is no.
People being upset about Darfur had nothing to do with why you sold this stock.
The Chinese government owns 88% of PetroChina. They also own control of 29 out of the 30 largest companies in China. The Chinese government is the one that has a position in relation to the Sudan. And they have it, if you own any one of the 30 largest companies in publicly traded companies in China, you will have the Chinese government as your majority partner. And the question is, are you responsible for their actions?
You're going to China next week for a ribbon-cutting ceremony for ISCAR.
Sort of the limit of my abilities, Liz. I mean, that's what they use this.
You're pretty good at cutting a ribbon.
I've gotten used to it, yeah.
Are you looking at other companies in China?
I don't look based, no, the answer is pretty much no, but I don't look based on countries or that sort of thing. I just read every report I can, and I try and figure out whether something is cheap.
But how would you find a report like PetroChina 4 years ago? This was not a name that maybe that a lot of people would.
Other guys read Playboy. Yeah, I read annual reports.
All right, we've never even talked about the supply picture, but he's talking about eventually being able to increase the supply of gold. You had a shareholder who asked you a question about gold over the weekend, and your response was pretty interesting. Berkshire versus gold. You want to talk about how that's performed over the years?
Yeah, but we can go beyond that. But certainly, when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce. And gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1 year period, 5 year period, any asset can outperform another asset. Tulips.
Why don't you join me, Warren? Why don't you join me and buy some cows? I mean, I like your farmland, but you're in Nebraska for Iowa. You love steak. I mean, we can have leather. We can have manure. We can have milk. We can have meat. We'll employ people.
You can have the manure. I'll take the meat.
I've got plenty of the manure. No, but we'll employ people taking care of the cows. I mean, that little bar of gold that's worth 50, whatever. We had one in here. Look, I think it was worth like $60,000 or $70,000. I can get like so many head of cattle for that and be productive. That was my point. But you like farmland. You just too lazy to take care of the cattle or something? Pay some people.
Absolutely. Absolutely. Have you ever tried to take care of cattle, Joe?
It must be. I think it might be hard. I know I've tipped a few, but I've never.
Have you tipped cows? No. I hope you have not tipped. That's mean.
It's cruel.
It is cruel.
They're sweet. They're sweet, but they're not too bright. Like me.
With land, you can get somebody else to do all the work, give them a percentage of the crop, and you can sit back there for 100 years and get a percentage of the crop, and you still got the land when you get all through. I will guarantee you that farmland over 100 years is going to be gold, and so are equities.
Listening to you talk, though, Warren, when you say, with your comments about bonds, that makes me think of financial assets in general, which includes stocks. And I think about the printing presses, not only in this country, but around the world. You've seen the commercial cha-chung, cha-chung, cha-chung with the central banks. And there are periods where financial assets are great, from the early 80s to 2000. And I just wonder if there's then periods where hard assets are great. And you see Paulson in gold and some of these other guys in gold or commodities. Are you just not comfortable with commodities? Are there times where you should be downplaying maybe stocks or businesses and going totally full bore into commodities, but you're just not comfortable doing that?
No, the alternative with me, Joe, the alternative, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it. If they closed the stock market for 10 years and we owned Coca-Cola and Wells Fargo and some other businesses, it wouldn't bother me because I'm looking at what the business produces. If I buy a McDonald's stand, I don't get a quote on it every day. I look at how my business is every day. So those are the kind of assets I like to own. Something that actually is going to deliver and hopefully deliver to meet my expectations over time. A piece of art, may go from $1,000 to $50 million, but it's dependent on what the next guy wants to pay me. The art itself, the painting itself, is not going to dispense cash. So I have to find somebody that's going to like it more. And with an asset like gold, for example, basically gold is a way of going long on fear, and it's been a pretty good way of going long on fear from time to time. But you really have to hope people become more afraid in a year or 2 years than they are now. And if they become more afraid, you make money. If they become less afraid, you lose money. But the gold itself doesn't produce anything.
Well, speaking of gold, though, we're looking at gold prices, and they were at another record high. They're up another $3 today, $1,434 an ounce. And there have been some big hedge fund managers, like a Paulson or a David Einhorn, who have really buckled down on these bets. Why would you steer clear, and do you think what they're doing is the wrong thing?
Well, I just don't know. I don't know whether cotton's going to go up. I mean, we use a lot of cotton, and I've watched it go from 80 cents to $1.90. You know, we use a lot of copper, and I watched it go from $2 to $4 plus. So, I mean, there's all kinds of things in this world that are going to go up and down in price. You know, maybe hamburgers will tomorrow. But I don't know how to judge that. I do know how to judge, to some extent, the earning power of some businesses. And the real test of whether you would like it as an investment is whether you would be happy if it never got quoted again, and just in terms of what the asset did for you. But that doesn't. I will say this about gold: if you took all of the gold in the world, it would roughly make a cube 67 feet on a side. So if you took all the gold in the world, we could have a cube that went down there 67 feet, 67 feet high, and that would be the whole thing. Now, for that same cube of gold, it would be worth, at today's market prices, about $7 trillion. That's probably about a third of the value of all the stocks in the United States. So you could have a choice of owning a third of all the stocks in the United States, or you could have a choice of owning that little block of gold, which can't do anything but kind of shine there and make you feel like Midas or Croesus or something of the sort. Now, for $7 trillion, there are roughly 1 billion acres of farmland in the United States. They're valued at about $2.5 trillion. It's about half the continental United States is farmland. You could have all of the farmland in the United States. You could have about 7 Exxon Mobils, and you could have $1 trillion of walking around money. And if you offered me the choice of looking at some 67-foot cube of gold and looking at it all day, you know, maybe touching it, and fondling it occasionally, you know, and then saying, you know, do something for me, and it says, I don't do anything, I just stand here and look pretty. And the alternative to that was to have all the farmland in the country, everything, cotton, corn, soybeans, 7 Exxon Mobils, just think of that. Add $1 trillion of walking around money. You know, maybe call me crazy, but I'll take the farmland and the Exxon Mobils.
All right, that makes some sense. Carl, you've got a question too?
I'm still trying to get the image of Warren fondling a giant block of gold out of my mind.
Just fondling it occasionally was what stuck with me.
Bring me a giant block.